Good morning, traders. Welcome to Tuesday of this beautiful week, and welcome back, back from our family vacation, and ready to rock and roll back again. See if we can get into some pretty good action here with the week ahead. So make sure to swing over to ssftg.com/brief to grab your morning brief levels. Those will be right there for you. And then before we jump on in, we always want to check the news so that we know what's going on and when it's going on, so that we're not taken by surprise. So as far as the news calendar is concerned, looking across the board for today, 8:30, we do have the core retail sales for February. That's forecasted at a negative 0.1%. If we go beyond that, we also have the retail sales for February forecasted at a negative 0.5%. As we move down the list, we do have some minor news at 8:55 with Redbook. Usually doesn't move a whole lot. 9:15 also has some pieces of news to keep our eyes on. But really, as far as news goes, there aren't any other large news announcements. The rest of the day is just full of medium and small, so not really a whole lot else to worry about necessarily. Sometimes, if we looking down the list of news, we do have some other things like the NAHB housing market indexes. Although they're rated as small numbers, sometimes the market will respond to some of these pieces. So it's important to keep our eyes on the times at least. We've got some news at 9:15, 10 o'clock, and then at 1300, and then later today, it's Tuesday, so API weekly crude oil stocks, that's coming out later today as well, and that'll give us a good clue as to what to expect for next week's inventories. But as far as the news, we really don't have a ton to worry about. The only big one's going to be at 8:30. So with that out of the way, now we can jump into some charts for today, today being 3/16 of 2021. First up to the plate is going to be the NASDAQ with what really feels like a multi-tiered channel that's attempting to still kind of complete. And the reason that is, at the bottom we had this higher low formation, and a lot of times when the market doesn't come back to those for a long time, it'll usually see something like this, where you have that spike and then they go into a channel. But what ends up happening is that spike in channel formation typically ends up widening out and finding the low of that channel. It just happens to do so typically quite a bit later. So am I expecting us to come all the way back down to the lows? No, probably not. We're probably not going to dip down that far. If we do, a lot of buyers will be waiting for sure. That is a huge zone of support. Looking at it from a horizontal structure point, it waited a long time if it does all of a sudden come flying back down to that. But realistically, is that going to happen? Probably not. More so, it would be a little bit more likely to probably see it dip back, retest some of this previous inside structure off the midline, and then try to find a balance from there. If anything, the buyers, they're not going to try to give up the fight, but the sellers are obviously getting a bit stronger. These breakouts were getting pretty strong, and now they're not really getting much above. It seems like we're transitioning into a range, which, if the sellers are going to try to take over, is the typical beginning stages. Then next up to the list, we've got the S&P with a nice bull rally to the upside, attempting to complete what looks like a drive to get to the top of the channel, or at least the yet-to-be-formed channel that is drawn off the bottom 2 points there and then transposed to the top. You could also move it a little bit lower, and we're kind of skipping in the middle of it. It's a little bit gross, which is why I don't have that line there. So looking at the way that things are forming here, it makes more sense that we have that initial drive higher. We have the shallower inside leg. We're stalling, seeing a little bit of an overshot on the highs, a weaker third leg, and then see a nice heavy correction back down to the bottom would make a lot of sense. And then from there, we have some pretty good sentiment as to why buyers would want to come in again. We've got the previous structural support. We're back to the half DP low, bottom of the channel, etc. But right now, it just appears as though buyers are trying to finish the job to the upside and try to get to the top of the channel. Next up, we've got gold, which has been rallying really aggressively. We've got the sellers are getting absolutely dumpstered on this last move. Sellers tried flushing the market down going into the weekend, and as soon as it started coming back up, this thing just rocket shipped all the way to the highs. Sellers at previous structure, sellers at L1, L2, whatever, they all got slammed. So when the market starts reversing, a lot of those sellers are going to be looking for the chance to get out of break even if it can dip back. And a lot of times, if you look at where the volume is on that move, you'll be able to kind of see where it is that that break even point will be. It's typically the lower point in volume. That's definitely not the high. Come on. Get it back there. There we go. Is usually the low point in volume when you have all of that accumulation. So when you've got all of this accumulation going on here, the low point is going to be right about there. You'll see that bump in volume. Well, the only place that bump in volume will have taken place at all is here, right? While the market was rallying higher. This volume profile wasn't, I mean, it's not even touching there. So this volume doesn't exist on anything over here. This is a big bump in sell volume, and it's likely, it could be buyers taking profit, right? Makes sense. It could also be sellers trying to sell previous structure. Whatever the reason, it's very likely selling orders more than anything else because the market rallied up into it. It stalled there. That gives us even more context, and then broke through. So once the market broke through that area, that void that was created is going to be that sort of break-even point that sellers are going to be building into, and a volume is showing us accumulation. So when the market dips back, they get out of break-even, and the market rallies back higher. A lot of the sellers, although it hasn't dipped back far enough from a math standpoint, from like add one, divide by 3 kind of thing, they have had a very good chance to get out of break even, which opens the door for this market to really crack the top and go screaming higher. We do have a short-term wedge in the way, but if it breaks above that, look out above. And then over on crude oil, which has a lot of funky patterning going on, and I think that's actually a really big clue. When we were looking at crude oil last, we were talking about this big accumulation in the market wanting to pull back and backfill the $61 area. When we're looking at all of this movement inside of here, we're seeing one thing stand out very obviously. There's a ton of patterns going on, right? There's flags, there's wedges, there's another wedge here, I mean, they're all over the place, and they build really well. All of them line up perfectly, but it just seems like they all kind of fall flat. And the only thing that I can really think of as to why all of these gorgeous patterns would fall apart is because an objective hasn't been met yet. Sellers are trying to get something done, or buyers are trying to stop the sellers from getting something done. But it just seems like there's still a big fight going on right now. And with all of this back and forth movement, one obvious objective would be to get a quick flush right back down to that $61 area. And what better object? I mean, you can see it just visually, right? You can see it dip down really quickly, bounce off the lows of the wedge, get a big dive down, and then whoop, right, go flying right back up. We see those all the time. And this, I think, would fall in line perfectly with exactly that. So at the moment, I'm just looking for a bigger dip on crude oil. Sure, we're finding some short-term support, but it's just going to be short-term plays until we get that bigger move down. Then we switch gears over to the euro, which has a nice little wedge breakout to the upside and a near perfect flat bottom to it too. Nice little reach out to try to get the job done, and just off to the races back to the upside. Realistically, this is a very strong attempt to try to break above the falling resistance. And if we look at the bigger picture, we can see, I mean, honestly, this has completed a lot of objectives. This giant drive to the downside, well, if we copy and paste that over, you can see they bounced off it to the tick. It was a huge objective that they filled down there below those 1.18795, 1.19 sub underneath that. You can see anything underneath 1.19 has just been bought up like crazy. So this seems like it was a big accumulation move before a nice rally higher. What I would really like to see in that context is a retest of those highs, or the retest of those lows. That's not really that fun if you're looking at the short-term wedge breakout. And honestly, this looks like it does have a good shot at trying to go higher. So in the short term, buyers with a flat bottom trying to break up, I mean, it makes sense. But I can't shake in the back of my head how nice it would be to see a quick little pullback down there to kind of finish the job, trap underneath these lows, kind of get everything out of the way, if you will. Then switching gears over to Bitcoin with a nice move. Man, this thing just ripped through the lows of this channel. And I think that really that's kind of what happened. We had a lot of buyers who were looking to continue supporting this spike in channel. They had the false break low, held back on the inside, did everything that you want to see it do. Came back, they finally had another chance to buy it, and it just fell flat on its face. The sellers were too strong at 60,000, and once that 60,000 brick wall showed itself in true form with this failure, well, I don't think buyers wanted to stick around to see what happens on a secondary bounce, and it starts ripping back down to the bottom. So at the moment, we've hit 60,000. That was a huge objective. The market moves in 20s at the moment, or at least over the past few years, 20,000 to 40,000, now 40,000 to 60,000. We've completed it. That job is done. Wouldn't be a surprise to see it pull back to 40,000. Honestly, that's what typically does tend to happen. Is that what I want to see happen? No, not really. But what we've got going on at the moment is a nice drive to the downside and the potential of this being a spike into some form of a spike in channel, spike in wedge, but it's breaking above it. So buyers are showing that there might be some sentiment shift back to the upside around this 54,000 mark. There does seem to be a lot of balance that's going on around there, and now that we've kind of bounced off of it again, that's going to be the zone that we're going to want to keep our eyes on. That's going to be the hot spot. So right underneath here, you can see the first push was an accumulation move. The second drive down took them a minute, but they did end up transitioning above. So long as buyers can stay above that, there's no reason that they can't make it back up to the highs. But if they start losing that ground, that becomes a pretty big problem. And then finally switching gears over to Ethereum with a relatively nice, that's a really nice divergent bottom. Very, very clear, very clean, just like we saw in Bitcoin. We also have that showing up right at the bottom of the potential wedge, right? A to B, and they found C pretty obviously. With that move to the downside, sellers were looking for the L1. It's fairly obvious. They were trying and trying and trying and trying to hold it down, and it failed. When it fails like that, all of those sellers who were trying to short, if they didn't get stopped out above or if they didn't take their lumps while it started rallying higher, they're going to be looking for the market to come back and allow them out at break even. And that's going to be the reversal point right back at 1750. What a shock. It's like we've never heard that price before. 1750 continues to play a huge role in Ethereum's overall health and support system on the 1750 line. So long as the buyers hold above it, we're still bullish. If they fail, we're probably going to dip a little bit lower. Realistically, the last time we failed below 1750, well, it didn't go so well. So realistically, buyers are going to want to see this hold. It's not really a good option if it starts breaking down.